Greetings my dear students. We are studying Class 11th Financial Accounting Part 1, Chapter number 3, Recording of Transactions. In the last video, we learned the art of recording in the journal and we learned 3 rules. That is, cash when increases. When cash increases, cash account is debited and the second account is credited. Rule number 2 was, whenever cash decreases, cash is to be credited and the second concerned account would be debited. And the rule number 3, whenever we buy goods or bought goods, the rule was purchase account is to be debited and the second concerned account will be credited. These were the 3 rules we discussed in the last video. Now, the time is to learn the 4th rule. Here it comes. Rule number 4. Whenever we will see a word sold goods. So, the rule says sales account is to be credited. Sales account is to be credited always. Okay? And the second concerned account will be debited. I repeat, whenever you will find the word sold goods, you will make sales account credit and the second concerned account would be debited. Let's understand this by an example. Sold goods to Ali, rupees 10,000. Recall the rule. Whenever we will find the word sold goods, we would be crediting sales account. Clear? So, let us do that. To sales account 10,000 and which is the second account? Concerned Ali. Ali debited. Let us understand this conceptually. We sold goods to Ali. I mentioned the name of the party. I mentioned the name of the consumer. That means Ali did not pay. When I sold goods to Ali and Ali did not pay, Ali becomes my debtor. And debtor is nothing but my asset. An asset increased. And when asset increases, it is recorded on the debit. Right? Second account which is related is sales. Sales means outgoing goods. The asset is decreasing. So, that is why it is credited. Or you say sales is an income to you and whenever income increases, it is credited. You can take it anyway, is it? So, students, let us start with the rule number 4. Rule number 4 is for selling goods. Whenever we will find the sentence sold goods in the transaction, the rule says sales account is credited. The way purchase account was getting debited, in this rule sales account is going to be credited. This is for sure. And the second concerned account would be debited. Am I clear? Let us understand this by an example. Sold goods to Ali. We sold goods to Ali and the rule says whenever we will find the word sold goods. Sold goods. Goods is the word. Sold building, no. Sold goods, right? The rule says whenever you will find the word sold goods, the rule is sales account is to be credited. Fine? Sales account is credited and which is the second account? Ali. Ali is debited. Now, I mentioned the name Ali. Ali means the entry is on credit. I sold goods to Ali, Ali did not pay to me, Ali is a debtor now, Ali is an asset. That means asset has increased, isn't it? Right? Asset increase, that is why it is debited. Am I clear? Please note it down, then we will move to the next example. Now, The next example is sold goods to Akbar for cash. I sold goods to Akbar for cash. Here, the same rule is going to be applied. Sold goods. Whenever we find the word sold goods, the rule says simply credit sales. That means to sales account. Here, I have made you a bit confused. I have mentioned the name and I have mentioned cash as well. Now, if you have two options, cash and the name of party, then what is to be written? I guess the right option is cash. Cash would be dominating on the words always, is it? Cash account debited. Or in case I wouldn't have written anything, simply sold goods, cash sales, it means same. Cash account debit to sales. But when the party's name, only party's name is there, in that case, party's name would be debited to sales, right? And when cash and party's name both are given, then cash would be the dominating thing. Is it clear? Let's move to the next example. Sold building. Let's say 10 lakh. See, here is a difference. It doesn't go with the rule. Why? Because the rule says the word should be sold goods. But here I have mentioned sold building. These are two different things. Buildings can't be my goods until I am a builder. I am dealing in the property. But until the question mentioned the nature of business, goods are goods and rest of the assets are my other assets like building, fixtures, furnitures. Those are not my goods. Okay? So what to do with this, sir? Let me tell you. Sold goods means to sales, but when it comes to sold building, it should be to building. When it comes to sold furniture, to furniture. When it comes to sales computer, to computers. Is it? To building. Right? And nothing is mentioned. So, cash account is debited. Simply. Now understand this thing conceptually. You sold building, building is an asset, asset is decreased, and whenever asset decreases, it is credited. And when cash comes, cash is an asset, it is increasing, and whenever asset increases, it is debited. This is how we make journal entries for sold goods or any other asset. In case, if I ask you, what about purchase goods? You say purchase account debit, what we studied in the previous video. But what if I say purchased building? Purchase goods and purchase building are two different concepts, isn't it? When I say purchase goods, purchase account debit to something. But when I say purchase furniture, furniture account debit. Purchase building, building account debit. Purchase computers, computers account debit. But when I say purchase goods or bought goods, in that case, purchase account debit. Because I taught you that purchase means goods. When I say purchase account debit, that means I am debiting goods. Goods are coming in. Am I clear? I guess I have made you clear with the rules of cash comes in, cash goes out, right? When cash comes, cash account must be debited. When cash goes out, cash account should be credited. When we purchase goods, purchase account must be debited. When we sell goods, sales account should be credited. These are the 4 rules which makes the accounting of journal, particularly journal, quite easy. And most of the entries in your syllabus, in your textbook are based on these rules only. I repeat, these are the rules just to make your entries much more easier, right? If you remember, in the last video, we discussed types of goods, purchase, sales, and I introduced two more words to you, purchase return and sales return. You can see on your screen, goods incoming, purchase account, goods outgoing, sales account. But sometimes we buy goods, we don't like that because of any reason. It could be defective, it could be, out of samples, not matching the standards, so we return them. When we buy goods and return it to the seller, the vendor, we call it purchase return. Same happens to us. We sold goods to our customers, customers didn't like them and they send it back to us. That is known as sales return, right? Let's see how do we journalize these things. Let's start. I'll take an example in which both of the transactions, selling goods and returning it, buying goods and returning it, would be covered, right? For an example, if I purchase goods from Ram, let's say 10,000. What would be the journal entry? The rule says whenever I see purchase goods, purchase account is debited to Ram. Clear? Purchase account debited to Ram. Simple. Now, we bought goods from Ram. Ram is my creditor. That's why Ram is credited, right? Now, I'm going to return these goods, not all, few of the goods to Ram. Goods returned to Ram. I return goods to Ram. Now, you just look at the entry when we bought goods from Ram. Purchase account debit to Ram. Now, I want you to flip this entry. Purchase account was debited, Ram was credited. Now, Ram would be debited and purchase, let's see. Ram debited to purchase return. We learnt purchase account and then purchase return, right? Do not make any mistake by crediting purchase account. There are few cases when purchase account gets credited, but not in this case. I repeat, when you bought goods from Ram, you made purchase account debit to Ram. Now you are returning goods to Ram. This entry is to be flipped. Ram account debit to purchase return, right? 1,000. And you can see purchase return is also known as return outward. You can use any of the word. Return outward. Return means goods are returning outward, going out. You bought goods from out, you are returning it to the external person only. That's why it is known as return outward. Am I clear, students? Please make a note of it. And we'll move to the next example for selling goods and returning it. Fine. Sold goods to Abraham, 10,000. When you sold goods to Abraham, what would be the journal entry? If you remember, whenever we find sold goods, the sure thing is to sales and Abraham is debited. Why Abraham is debited? Because the party's name is mentioned, and when the name is mentioned, that means the entry is on credit. Abraham didn't pay to me, Abraham is my debtor, debtor is an asset, asset increases from debit side. Is it clear? Or simply, when sales is credited, Abraham would be debited. So simple. Now, Abraham returned goods. Abraham returned goods, right? So just flip this entry the way you did it in the case of purchase. Abraham account debited to sales was the entry when we sold goods to Abraham, right? When we sold goods to Abraham, I made Abraham account debited to sales. But now when we are getting a return from Abraham, this would be flipped. Sales would get debited, that means sales return would get debited and Abraham credited. Simple. Sales return debited to Abraham, right? And the synonym for sales return is return inward. Return inward. This is how we record the entry for sales return. Am I clear? Let's start with some complex entries of journal which includes outstanding and prepaid when we talk about expenses, accrued and advance when we talk about incomes. We learnt this thing in the last video. Okay, let us start with this concept. Students, when we pay rent, there is no confusion. Cash has gone out, so cash is to be credited and rent account is to be debited, right? Rent is getting debited because rent is an expense. And the second point, rent has fallen due. That's why rent is debited. Rent has fallen due. That's why rent account is debited. My dear students, here we have to learn that accrual basis of accounting says all expenses would be debited by the amount it has fallen due. I repeat, accrual basis of accounting says expenses would be debited by the amount it has fallen due. You learnt that expenses are debited, but accrual basis says that all expenses are debited with the amount it has fallen due. So when I debit rent account, it means the rent has fallen due for the period. Is it clear? Now I will add something to it. Sometimes the rent or any other expense falls due, but we are not able to pay that, and that is known as rent outstanding. Rent outstanding means rent has fallen due but not yet paid. So what should we do? See, accrual basis says all the expenses should be debited by the amount which has fallen due, isn't it? And when I say rent outstanding means rent has fallen due. So we must debit rent account. We must debit rent account because rent has fallen due. Outstanding means rent has fallen due, but you didn't pay for that. So I am not going to credit cash in that case, isn't it? Because outstanding means not yet paid. When you haven't paid the rent, that means it's a liability, and liabilities increases from credit side. So rent outstanding would be credited instead of cash. Am I clear? Please make a note. And the second case, sometimes we pay rent or any other expense in advance. That means we have paid the rent, salary, commission, interest, any kind of expense in advance. It hasn't fallen due yet, but we have paid for it. So one thing is very sure, that we have paid, that means cash has gone. So recall the rule what we have learnt, whenever cash goes, cash is credited. Now we have paid the rent, cash has gone. It doesn't make any difference the rent was due or not, cash has gone. So the rule says whenever cash is gone, to cash account. Cash is to be credited to cash account is done. And what is the second account? Rent. No. The answer is no. We can't debit rent because expenses are to be debited when it falls due. But in this case, you have prepaid. You have paid the advance. Rent hasn't fallen due. Assume April month is running and you have paid the rent for May and June. You can't make rent account debit until May and June comes, isn't it? Yes. So, rent account is not eligible to get debited in this case. What account would be debited? I guess a new thing which is known as a new account, prepaid rent debited. Any amount, let's say 2000. So, this is the entry for outstanding and prepaid things when it comes to an expense. Now, let's start with incomes. Students, as a tutor, as a teacher, my main source of income is fees. When I receive fees, it makes a very simple entry like this. Fees received rupees 10,000. Simply, I am not mentioning anything for which month, for which year. When the question is silent about all these things, that means the fees which I have received has fallen due and I have received it because question is silent. So, I would like to write cash has come. So, cash account is debited. Cash account debited because cash has come, and the second account is fees. Fees credited, and you remember fees is an income and incomes increases from credit side. That is why this makes it a simple entry, but it has two complexities. One, sometimes there are students who do not pay fees and fees becomes due, right? Assume May month is running and students studying haven't paid that, right? Fees has fallen due, but I haven't received it yet. So, such students are my debtors. I have to receive money from them, isn't it? So, I call such an income as my accrued income, right? Students, for this thing, I would like to write fees due but not received. What does this mean? This means fees has fallen due, right? But no money has come yet. So, how would I record it? Incomes are to be credited, but when? When it has fallen due. In the case of accrued income, fees has fallen due, isn't it? So, income is to be credited, isn't it? To fees, right? And accrued fees being an asset, any amount would be debited. Clear? And the next one is advance. Sometimes students studying in class 11th pay me the fees for class 12th in advance. So, I have received cash from them. So, one thing which is very sure that cash has come, so cash account would be debited by any amount, let us say 5,000. But do you think it's an income which has fallen due? So, the answer is no, because I have received the fees, but it hasn't fallen due yet. So, it is a liability on me that it might be a case that I have to return it. So, such money is known as my liability. To advance fees. Clear? This is the concept of accrued income or advance income. Let us start with the new topic, GST. Students, you might have visited some restaurant, any pizza outlet, and you have seen the bill, I guess, where there is a cost of the food what you buy. Then there are two more columns of CGST and IGST. GST means goods and service tax. Any good or service you purchase or you sell, government charges a flat tax on it, and that is an indirect tax, which is attached to every buying and selling. And we have to learn such patch, we have to learn these taxes. Not taxes, exactly, accounting of these taxes. Let's start by an example. Before doing that, I would like to tell you there are two types of GST when it comes to within the state sale. It is CGST and SGST. Let's take an example. Usually, we have an entry purchase goods 10,000. Then what do? We simply make purchase account debited 10,000. No change in this fact. But I would like to do an addition. If I am buying goods, that means it attracts GST. %6 SGST, 6% CGST, right? So, make a rule in your mind, when purchase account is debited, GST is also debited. Clear? If purchase account is debited, GST is also debited if the question is of GST, right? If purchase account is debited, input CGST. Yes, with purchase there will be input CGST and input SGST. 6% of the face value. 600, 600. 2, nothing is mentioned in the question, so it would be 2 cash. 11,200. This 11,200 is the sum of 10,600 and 600. Always remember, the total of debits and credits must remain same. And the rule is, if purchase account is debited, GST is also debited. Clear? Now, when it comes to selling goods, let's say we sold goods for 20,000. And what did we learn in our rules? If sold goods is there, then what is the very sure thing? That sales would be credited. We will do the same treatment here. Now, I am adding GST to the transaction, like adding spices to the life. 6% CGST, 6% SGST. This rate can vary from goods to goods, services to services, right? The way GST was going parallel with purchase, GST goes parallel with sales as well. If sales is credited, GST is also credited. Clear? In the case of purchase, we were writing input CGST, input SGST. Now, in the case of sales, we would be writing output CGST. 6% of 20,000 is 1200, output CGST and output SGST, and combinedly cash account is debited. by the amount 22,400. This is what we do for journal entries of GST while buying goods, while selling goods. I hope these all entries are very clear to you. This is all for purchase goods and sales good with GST or say without GST. In the next videos, we will learn how these journal entries are posted to the ledger. Till the time, I would like to suggest keep practicing these rules of debit and credit, keep practicing the questions given in your textbooks. Thank you very much. Happy learning.